Welcome to Raju Rao Accounts. Today let us discuss about the terminology in accounting. In this class let us discuss about the terminology because you see accounting is nothing but the language of business. Unless and until we know the terminology of the language there, then we will not be able to handle that particular language. So here we need to learn about the terminology which is used in accounting. So the meaning of this particular terminology people should be aware, then you will be able to handle your subject with much more ease. Okay, let us discuss the terminology. So first of all, let's see what is the meaning of entity. See, entity is nothing but it is one economic unit that performs some economic activity. Okay, entity means it is one particular economic unit which performs one economic activity. Economic activity means it is an activity wherein some resources are used, some production is being made, or some service is rendered. To render that service, some goods are being manufactured. So this is called as an economic activity. So just like take for example one company, just like Tata company, MRF company, something of this particular type there, wherein some particular economic activity is being carried on, where some resources are being used, some production process is being taken up, they are producing some particular good, okay, what for to make the sale or for rendering some service there. So there is an economic activity. So that particular economic activity which is being carried on is nothing but it will be carried on by that particular entity. Okay, చిన్నగా చెప్పాలంటే ఒక సంస్థ. Next, event means it is an happening of consequence to an entity. In other words, it is a happening of consequence for an entity means for one particular entity it is one particular thing which is happening, it is one particular consequence which is happening. Just like they have purchased a raw materials, so purchasing of raw material is one particular event. Okay, something of that type. In other words, here it is that particular event, okay, which will happen in a particular entity. Next again, transaction. Okay, the knowing of transaction is very much needed for you people to know. See, this transaction is nothing but it is the exchange in which each participant receives or sacrifices some value. Okay, in other words, here a transaction is one wherein more than that of one party will be involved. Okay, each party will be in other words, each party will be sacrificing something for something. Okay, in other words, just like simple concept, simple example I will give you. Just like you have gone there to the shop there to purchase some particular good there. Okay, at that time you observe here something which is happening between you and that shopkeeper is nothing but it is a transaction wherein each one of you are sacrificing each party. Yourself is one party, that particular shopkeeper is another party. Okay, from each person's point of view you are sacrificing something to get something. Okay, so that is called as a transaction there. So it is nothing but the exchange of goods or services. Okay, in other words, here in our example now you observe what happened, there is some exchange of good or service there. For what? Or on cash or on credit basis. Just like you have gone there to purchase some particular one notebook, if you take, okay, you have given cash and you have obtained that particular good from your side on point of view, or from shopkeeper's point of view. If you observe, he has sacrificed that particular good, okay, to get that particular cash there. So this particular transaction may take place on cash basis or on credit basis. So based upon that, a transaction may be classified as cash transaction or a credit transaction. We will call a particular transaction as a cash transaction if cash is instantly moves from one party to the other. Okay, in that particular transaction. See, we will call a transaction as a credit transaction wherein the payment in that particular transaction will be postponed for the future period. Okay, just like you have gone to the shop to purchase some particular items there for your particular provisions for your house there. Okay, you have promised that you will pay after 1 month or 2 months, something like that. Okay, so at that time instantly you are not paying cash, but we have promised to make payment in the future. So there is nothing but a credit transaction, we can say. So like that, any particular transaction wherein the payment or the movement of the cash in that particular transaction is postponed to a future period, we will call it as a credit transaction. Okay, then again voucher. Okay, what is the meaning of a voucher? See what it says, it is a document which serves as a proof or evidence of the transaction. That means a voucher is something which is standing as a proof of one particular transaction taken place. It is standing as a evidence of one transaction taken place. Based upon this particular voucher only, postings will be done in your particular books of accounts. In other words, here the recording in your books will take place only on the basis of this particular voucher. Okay, in other words, here there should be some particular proof, okay, to say that a transaction has taken place. So that particular proof, we cannot name it as one particular bill or one this thing or that thing. It is anything which is standing as a proof of one transaction taken place and based upon which you are recording in the books of account. That is called as a voucher. Next again, journal. Okay, what is a journal? Journal is the book of prime entry, he says. Prime entry means here among the accounting books which are being maintained, the first book which is being maintained is called as a journal. So this is that particular book wherein the business transactions for the first time they are, in other words, that particular business transaction for the first time it is recorded in this book called as a journal. So that's why it is called as a book of a prime entry. Now here, how it will be recorded in this particular journal? It will be recorded by following the rules of accountancy, okay, by in the way of an entry. So what is the meaning of an entry? Entry, it is the record of transaction which is made in the journal. That means in the journal, the transaction which is being recorded, it will be recorded by following the principles of bookkeeping, okay, the principles are, in other words, whatever this particular rules of debit and credit are there in accountancy, based upon that we are going to record that particular transaction in the journal by way of an entry. In the coming periods we will be knowing how to write a particular journal entry, okay, there we will be learning about that particular one, how we are going to write the entry there. Then again, capital, okay, what is the meaning of capital? It is the amount invested in the enterprise by the proprietor. Proprietor means the owner, the person who is the base for starting of the business, the person who has started the business by investing some money in it, okay, whatever he has invested the money or money is worth whatever he has invested in the business to commence the business, okay, that is called as a capital. Okay, just like you take for example, the person who started the business, he might have bought some particular amount in terms of rupees, okay, and similarly some furniture he might have bought, some building he might have bought, okay, certain other assets also he might have bought into the business to commence the business. So when we use the word capital, simply here we can say it is money or money is worth which is bought by the proprietor into the business to commence the business is called as capital. Okay, next, drawings. Okay, what is the meaning of drawings? Cash or goods or any other assets withdrawn by the proprietor for personal use. Okay, in other words, here from the business proprietor, if he has drawn, in other words, if he has taken some cash or some goods or any other assets belonging to the business for personal use. When we say personal use, for himself or for his family members, okay, then we will term it as drawings. Okay, that means from the business, the proprietor, if he has used the money, in other words the cash, or he has used any particular asset or any particular good, okay, for himself or for his family members, okay, at that time we will call it as the drawings. Okay, next observe here, assets. Now what is the meaning of the assets? The knowing of the assets is nothing but, in Telugu మనం ఏమంటాం assets కి ఆస్తులు అంటారు. Assets are ఆస్తులు. See, what is the meaning of an asset? See, many of you people, you will be able to know the meaning of it, but you will not be able to express it what it is. You should be able to express it, then only you are having the grip on the subject there. So what is the meaning of an asset? Asset means it refers to the tangible objects or intangible rights of an enterprise which carry future benefits. Okay, observe here, when we use the word tangible, tangible means it is something which can be seen with our eye, which can be touched, which can be moved, which is having one shape, size, form, etc. It is called as a tangible. Okay, so here asset is nothing but it is a tangible object there, okay, or it is an intangible right. Intangible right means it is that particular thing which cannot be seen with our eye, okay, but it is some particular right which we are having, okay, it is called as intangible right. Okay, so whatever this particular tangible objects or intangible rights are there for the enterprise or for the business, okay, which carry future benefits. In other words, with the help of this particular tangible objects or intangible rights there, the future benefits will be reaped by the business there. They are called as assets. Okay, they are the possessions of the business there. They are those things which are acquired by the business there, okay, to use it in the business there. Okay, so okay, they are called as assets there. See, these assets again they are classified into two, current assets and fixed assets. Okay, what are current assets, what are fixed assets? Simply you observe here. First let us discuss regarding fixed assets. See, fixed assets are nothing but here, these are those assets which are acquired by the business to retain in the business, okay, not with the intention to sell it again, okay, they are obtained or they are possessed by the business to use it in the business, okay, for the longer period, for a period of more than that of 1 year, and they wanted to generate some revenue out of that. That is called as a fixed asset here. So this particular fixed assets, if you observe again, they will be classified into tangible and intangible. Now only I have told you, tangible asset is something, an asset which can be seen with our eye, which can be touched, which can be felt, which is having one shape, size, form, which can be moved from one place to the other. Simply we can say tangible assets, normally they will be having mobility also, mobility. So they are tangible assets here, but it does not mean that every other tangible asset is having that mobility. These are some particular features of tangible assets here. So simple way we can say these are those assets which can be seen with our eye there. See, these tangible assets, example you can say land and buildings, okay, for plant and machinery, furniture, vehicles, okay, like this. Okay, these are those particular assets which can be seen with our eye. See, basically these particular assets, tangible assets are those assets, these particular fixed assets are those which are retained by the business, which are obtained by the business to use it for longer period. Okay, not, they are held by the business not with the intention to sell it again, but to use it in the business for running their particular business or for to run their particular enterprise. See, this is tangible assets. Coming to intangible assets here, intangible assets are those nothing but normally these are the rights which are obtained by the business. These intangible assets are those which cannot be seen with our eye, but the benefit of that particular intangible asset will be reaped by the business, just like you can say goodwill. Okay, goodwill is nothing but the good name, the fame acquired by the business. Okay, simply we can say it is the extra earning capacity of a business when compared to the top similar other businesses. That is called as a goodwill. Similarly, we are having copyrights. Okay, these are the occupational rights. A writer or the person who has written a manuscript will be having there. That is called as a copyright. So these are all intangible assets. The benefit of that particular asset can be reaped, but it cannot be seen with our eye. So they are intangible assets. So fixed assets, normally simply here we can say these are those assets which are acquired with the intention to use it for a longer period, for a period of more than that of 1 year. Then coming to the top, the second type, current assets. What are current assets? Current assets are nothing but these are those assets which will be converted into cash within 1 year period there. Okay, they are convertible into cash within a 1 year period there. In other words, here in one particular period of some 12 months there, normally they will be converted into cash, or they might be in terms of cash itself. Okay, so that's why current assets we can say cash in hand, cash at bank, or we can say bills receivable. Bills receivable means these are those bills on which the business is supposed to receive the money. Normally within 2 or 3 months they will be able to get the money on these particular bills. Similarly, sundry debtors we will come across. See, after this we will discuss sundry creditors, sundry debtors. There I will explain regarding sundry debtors. Sundry debtors are also current assets here we can say. So this is about the assets there. Coming to the liabilities here. Now what are these particular liabilities? They are the financial obligations of an enterprise other than the owner's funds. Observe here, they are the financial obligations of an enterprise. Financial obligation means financially business is obliged to give it to the others there because of some business activity taken up there. Obligation ante baadhyata. Okay, in other words, business, whatever money the business owes to the outsiders, okay, they are the liabilities we can say. See what he says, other than that of the owner's funds, he said. Owner's funds are nothing but the funds which are provided by the owner to the business. They are owner's funds. Basically capital we can say is the owner's fund. Reserves we can say owner's fund. Okay, as the time passes on in our classes I will explain the terms as and when we come across regarding them. Now simply remember, owner's funds are nothing but here funds which belongs to that of the owners, just like a share capital or capital we can say. Similarly, reserves and surplus we can say reserves. Okay, all those are owners funds. So other than that of owners funds, whatever other liabilities are there, they are nothing but they are the obligations of the business. In other words, there our business, it owes money to the others there other than that of the owners. In other words, whatever our business is supposed to pay it to the outsiders other than that of to the owners, they are called as liabilities. Telugulo simple cheppalante appulu antaru, appulu, right? Then again, these liabilities again are classified into two: current liabilities, long term liabilities, or non-current liabilities. See, what is the meaning of non-current liability? What is the meaning of current liability? This current stands for one accounting period, just like current assets, current liabilities. Okay, current liabilities are those liabilities which are to be repaid by the business, by the enterprise within a period of 12 months. They are supposed to be paid to they are the obligations which the business has to meet within 12 months period there. They are current liabilities, just like bills payable. Okay, bills payable means these are the those particular bills on which the business is supposed to pay within 1 year period. Bills payable, current liability. Trade creditors. Okay, creditors are the people to whom our business owes money because they have provided credit to our business. Okay, so these are also to be payable within 1 year period. Similarly, bank overdraft. Okay, what is the meaning of overdraft? Drawing more amount than that of what we have in our account by one particular agreement which is reached between you and the banker is called as a bank overdraft. Okay, so whatever money you have drawn according to that of your particular agreement with the banker, whatever amount you have drawn over than that of your money from the bank there, it is bank overdraft. It is a current liability. Within 1 year period you are supposed to pay it. Similarly, outstanding expenses. Outstanding expenses means, now here we should be able to know what is the meaning of an expense. Expense means here it is the spending of money, okay, for the economic activity, okay, for whatever economic activity is taken up in the business there, whatever money is being spent, okay, it is an expense, okay. So this particular outstanding expenses means expenses due but not paid. Expenses due but not paid. That means here it is an expense which you are supposed to pay but you have not paid it till now. It is called as an outstanding expense. Just like I will give you the example of outstanding expense, just like outstanding rent is there. Okay, rent due but not paid is outstanding rent. Outstanding salary, we will say. Salary is due but not yet paid. Okay, in other words, the time of paying that particular expense is completed but still you have not paid. Just like last month's salary, you have not paid it till now. Okay, so it is nothing but outstanding salary we will call. Okay, so these are all current liabilities which are to be met within 1 year period. These liabilities are those which are to be met within 1 year period by the enterprise. They are current liabilities. Now coming to the long term liabilities or non-current liabilities. Long term liabilities are nothing but here, these are liabilities, okay, which are to be met by the business there, which are to be paid by the business, but not within 1 year period there, in the long run, in a span of some more than that of 1 year. They are called as long term liabilities. Just like long term loans taken for a period of some 4 years, 5 years, 10 years, 20 years by the business from the financial institution or from any other people also, just like by debentures, money is being borrowed by the business there, okay. So whatever money is to be paid to those particular debentures is a financial obligation which the business has to meet it in the long run. So debentures are long term liabilities, okay. So let's discuss regarding purchases now. Purchases, what are purchases? Total amount of goods obtained by an enterprise for resale or for use in the production of goods or for rendering services. So what is the meaning of purchase means? In accountancy, the word purchase we will use for what purpose? See, it is nothing but the total amount of goods obtained by an enterprise for resale. Okay, goods means here these are those things with which the businessman deals with. In other words, a trader, if you observe, the goods are those things which he purchases it with the intention to sell it again. Okay, they are the goods. Just like for cloth merchant, cloth is the good. So something of that particular type. So if goods are being purchased there, then we will use the word purchases. Okay, purchase means here the total amount spent. Okay, the total amount of the goods obtained by an enterprise for a resale. Okay, in other words, these are those things which are obtained by the enterprise for selling it again and to generate some revenue out of it. See, or for use in the production of the goods or for for rendering services. See, for use in the production of the goods or for rendering services means here, just like a company, if you observe, company what it does, it manufactures the goods. So for manufacturing it, it will be purchasing some raw material. What for that raw material they are purchasing it? With the intention to produce some particular goods for making them sale. So they are also treated as a purchases only here. Okay, or for rendering services, whatever is being held in the business for rendering services, there is also comes under purchase there. In other words, the purchase of those things there. So simply here in our ordinary language we can say the good purchases, we are going to use it here for those particular things or those particular goods which are being purchased with the intention to sell it again. Okay, so they are called as goods there. So if you purchase it, we will use the word purchases. Or for making that particular sale there, if we are taking up some manufacturing activity, so to manufacture it, whatever other things we purchase it, which will goes into the production process, they are also treated as purchases only. So this is about purchases. Now coming to the next term, sale. Sale means it is the amount for which the goods are sold or services rendered. That means here when these particular goods are being sold there, okay, whatever money is being received, okay, when we sell it, that is called as a sale. Okay, when we have rendered some services there, for that whatever we are charging it, that is also treated as sale of service. Okay, the next, stock or inventory. Stock means, what is the meaning of stock or inventory? If you observe here, see, inventory or stock means here tangible property held for sale in the ordinary course of business. Okay, in the ordinary course of business means in the normally in the business there, whatever is being held by the business for sale, that is treated as the stock of that particular thing. We will call it as a stock or inventory. So there is a tangible property of the business there, Tangible property means a property which can be seen with our eye, is a tangible property, okay, which is held by the business for sale in the ordinary course of the business there. So next, similarly we can say inventory or stock also. This is another definition of that one only. See, stock or inventory is for consumption in the production of the goods or for service for sale. In other words, here for production purpose also, if you are having in the business there, okay, the business is having certain things there which are used for production process, okay, with them, they are also treated as a stock there, just like stock of raw material, stock of work in progress, okay, stock of finished goods, okay, these are those things which are held in the business, okay, what for production of the goods or for rendering service. So that is also treated as a stock or inventory, okay. See, next, these inventories comes under current assets, okay, there we will discuss regarding that particular one. Then again, next, trade debtors. Trade debtors refers to the person from whom the amounts are due for goods sold or services rendered on credit basis. That means here our business, okay, when it has sold goods to some party, okay, on credit, or if services are rendered on credit, at the time whatever amount that particular person owes to our business, okay, that is called as, that particular person is called as a debtor, okay. We are calling it as a trade debtor because here this particular person has become a debtor because of the trade activity which we have taken with him, okay. In other words, here our business has sold some goods there or some services are rendered to that particular party, wherein that party, in other words, that service or that good is sold on credit and money that particular party owes to our business. So that person is treated as debtor to our business. He is a debtor to our business. So debtors are the people who owes money to our business. Next, trade creditors. See, trade creditors refers to the person to whom the amounts are due for goods purchased or services rendered on credit. In other words, our business, it has purchased some particular goods from some party, or if you have obtained some service on credit basis, wherein we owes money to that particular party. We means our business owes money to that particular party. At that time, that party is treated as, it will become a creditor to our business there. Okay, so simply here we can say debtors are the people who owes money to our business, whereas creditors are the people to whom our business owes money. Okay, so creditors are liabilities to our business, whereas debtors are assets to our business. Next, revenue. See, what is the meaning of revenue? Revenue refers for the amount charged for the goods sold or services rendered. Okay, in other words, here whatever money is being charged for the sale made in the business, okay, or for service rendered, whatever money is being charged, whatever money is being received for that sale of that particular good or for rendering the service there, that is treated as revenue. Okay, so simply here you can understand examples are sales, you have made it. Once again, you should remember very well here, this particular sale means here sale of goods only, okay, sale of goods only, okay, goods means here, goods are those things which are normally dealt in the business with the help of which the businessman is carrying on his particular operating activity, okay. So sales. Similarly, commission, in other words, here commission, here we can say commission received, okay, commission received is one particular revenue. Similarly, interest earned, okay, when you have given some loan to some particular party, or if you have invested somewhere, on that you may earn some particular interest there. So these are revenues. So normally revenue term, if we use it in our accounting books there, we will treat revenue means it is just like income only, okay. See, similarly expenses also may be revenue expenses. So see, what is the meaning of an expense here? Expense refers to the amount incurred in the process of earning revenue. In other words, here to earn this particular revenue, revenue means income, here you can say, to earn that particular revenue income there, whatever amount we are spending it, that is called as expense here, okay. So simply, in other words, we can say spending of money with the intention to make some benefit out of such spending is also treated as an expense here. So to earn this particular revenue, whatever we are incurring the expenses there, whatever money we are spending it, it is called as an expense here. So these particular expenses again may be classified as revenue expense and capital expense. Okay, simple concept between revenue and capital is very much clear, very much easy to understand here. Revenue expense here means the benefit of this particular expense is limited to 1 year only. In other words, here see, revenue expense means this expense you will be incurring, the benefit of that expenditure, okay, it will be limited only for 1 year. That means before completion of 1 year, the benefit of that expense will be completed. Just like if you have paid rent paid, okay, in accounts if you use simply rent, it is nothing but an expense, okay, it is an expense, rent, salaries, these are all expenses. So rent means here rent paid. Okay, when you have paid the rent, simply you understand here, if you have paid rent on the first of the month there, within 30 days there, its benefit will get expired there. Again you are supposed to pay the rent. So they are recurring in nature. Revenue items are recurring in nature. So this is a revenue expense, rent. Similarly, salaries. Okay, if salaries are paid to the employees within 30 days, the benefit of that salary paid, salaries, which is an expense there, its benefit will get expired. Again you are supposed to pay the salary. So this type of expenses are called as revenue expenses. So simply here we can say an expense whose benefit will get expired before completion of one accounting year. Okay, before one particular year there. Okay, it is called as the revenue expense. See, opposite of revenue expense is capital expense. What is the capital expense? The benefit of this expense is for more than that of 1 year. In other words, here the benefit of this expense you will be able to reap for more than that of 1 year. Just like business has purchased one building, some furniture is being purchased, okay, or some asset is being purchased. At that time you observe there the benefit of that particular asset purchased, okay, can be reaped for more than that of 1 year. Okay, so such type of expense we will call it as a capital expense. Okay, just like purchase of building, furniture, okay, etc. Then similarly, net profit, if you observe, excess of revenue income over revenue expense. Okay, now I think there should be clarity in your mind what is the revenue expense, what is the revenue income. Revenue means here the benefit of that particular one will be limited for less than that of 1 year. Okay, whether it might be revenue income or revenue expense. Revenue income benefit you will be able to get that benefit, the benefit of that one will be for 1 year only. Revenue expense, the benefit will be there only for 1 year. So simply revenue income minus revenue expense is your net profit. Similarly, net loss means it is the opposite of net profit. So simply here we can say excess of revenue expense over revenue income. In other words, here revenue expenses are more than that of revenue income. At that time we will be making net loss. Okay, so these are some particular terminology which you people should get acquainted. Okay, as we are continuing with our topics there in the coming periods there, okay, we will be able to learn about the various other terminology, whatever it comes, I will be trying to explain to you people.